This is Macro Analytics, delivering frank conversations on global macroeconomics and market analysis, outside the mainstream, featuring discussions and debates between Gordon T. Long, publisher and editor of GordonTLong.com, and his guests. The content of this discussion is strictly the opinion of the participants. It is in no way a solicitation for business, nor is it to be considered investment advice of any sort. Always consult a registered investment advisor before making any investment decision. These discussions are extremely hard-hitting and terribly frank, and parental discretion is advised. Now, on to the show.
Good morning. I'm Gord Long with GordonTLong.com. As part of our ongoing series on financial repression, I have Dr. Thorsten Polleit joining us from Frankfurt. Thorsten is a very well-recognized writer and noted Austrian economist. He is chief economist of the Degussa Gold Trade, president of the Ludwig von Mises Institute in Germany, partner of Polleit and Rickard Investment Management, and when he has some extra time on his hands, he's also honorary professor at the Frankfurt School of Finance and Management. Welcome.
Good morning, Gordon.
Thorsten, did I pronounce your company correctly?
Yeah, you did. It's Polleit and Rickard Investment Management.
Okay, I never know my German and pronunciation. Now, you're coming to us from Frankfurt here this morning, are you not?
Yes, I'm located in at the moment. I'm in Königstein, quite close to Frankfurt.
But the firm, the investment firm, is out of London.
Yeah, that's right. The firm is an LLP, so it's an investment management LLP company located in London.
Okay, Thorsten, maybe we could give our listeners just a brief overview of your background and your and the investment group.
Yeah, well, as you say, I'm basically an economist. I'm very much into the Austrian School of Economics. I worked for around about 15 years in international investment banking. Nowadays, I have changed course a bit. I have my own company. I also support Europe. It's a German company, but it's Europe's largest precious metals trading firm. As you say, I'm also doing some teaching jobs at the moment at the university in Bayreuth, and so as you can see, I'm a busy man these days.
Well, I can see that, and then you do a lot of writing too out on the web. Let's just jump right in. We're here to talk about financial repression. Well, how would you define it to our listeners in your words, so that they could clearly understand the concept?
Well, financial repression basically means policies that try to erode the outstanding financial wealth. For instance, governments have bonds outstanding, and through financial repression, they try to reduce the amount of real debt.
And how do they do that?
Well, there are various ways to do it. One is, for instance, to control the interest rate, so to keep the nominal interest rate controlled, for instance, by the central bank, and at the same time ramping up the inflation rate. And that means the real return the investor can, the real return on investors' assets declines, and so to speak, inflation eats away financial wealth.
You know, a lot of people, I think, understand inflation as nothing more than really a form of taxation, a stealth form of taxation, because inflation is first and foremost a monetary event. But I don't think they understand negative real interest rates, and you and I were just briefly talking about that before we began. Can you help people with that, and clearly what the issue is with negative real interest rates?
Let me just, if I may, return to the issue you're raising. What is inflation? Well, most people wouldn't know what inflation means. Most people would think rising prices is inflation, and I would say rising prices are just one of the many symptoms caused by an increase of the stock of money. Once the central bank increases the money stock, sooner or later people start purchasing goods and services with the new money. thereby increasing the supply of money, raising the demand for goods and services, and as a result, prices go up. So prices can go up for, let's say, consumer goods, prices can go up for real estate, for stocks and bonds. And what I'm saying here is rising prices have just one cause, and this is an increase in the stock of money, and as a result, an increase in the quantity of money is what inflation really is.
And therefore negative real rates?
Negative real rates would be if the rate of inflation exceeds the nominal return on your asset. For instance, if you hold a 10-year treasury bond yielding 2% per annum, and at the same time inflation would be running at 5%, your real return would be minus 3%. So every year your financial wealth will decline by 3%.
So who wins then? Why would the government want to have the developed countries negative real interest rates? Who are the winners and who are the losers?
Well, the losers are the people, the savers who have bought, to come back to my example, who have bought a 10-year treasury bond yielding 2%, who would have expected inflation to remain very moderate, but have been surprised by a higher inflation. So they suffer, their financial wealth declines by 3% per annum. And at the same time, the government would benefit because the outstanding debt becomes less and less and less in real terms.
But why would the government do this when it's harmful to its own people?
Well, the government has its own interest. The government not always, basically never acts in the interest of the people.
But these are democratically elected governments, aren't they not? So,
well, at the moment, this is so. And as you know, democracies suffer from various deficiencies. One deficiency clearly is that they ramp up ever greater amounts of debt. And once a certain point has been reached, namely a point from which onward the government can no longer increase its outstanding debt or can no longer service its outstanding debt, it has a great interest in reducing the outstanding amount of debt, and that comes then on at the expense of the innocent saver.
Yeah, the way I kind of come to conclude that it is, Thorsten, everybody understands taxation and how government can get your money that way. Inflation, as you've articulated, really is another form of, it's a stealth tax, and that's how I look at it. But when you reach a point where you start to run out of runway, and it gets to be such a level of debt and debt obligations, the only solution then becomes negative real interest rates or financial repression, where you force regulations and restrict investment so that you have to take a higher level of risk for the same return. In other words, they start to steal the money faster. Maybe it's the way I look at it.
Well, you're absolutely right. I mean, negative real interest rates, this is an instrument for eroding the saver's wealth to the benefit of the government, but not only to the benefit of the government, but also, for instance, other highly indebted interest groups would benefit, like the banking industry, because their outstanding liabilities are getting reduced in real terms. So this is a redistribution of income and wealth on the grandest scale imaginable.
And you use the word redistribution. So what happens is it's wealth that's being transferred. Is that a correct way of looking at it?
That is so. As you put it, there are losers and there are winners. Some people benefit at the expense of others.
Now, nobody is more well aware that unsound money is a method of preying on society that are used by the government, central banks throughout history. But I think this particular episode is maybe particularly egregious. What do you think? What do you see the short and long range being for the developed world and the emerging world? Because this financial repression is pretty well global now for the indebted countries.
For the time being, I I see still great support for measures trying to keep alive the so-called unbacked paper money system. And the term I have in mind is something I put it as collective corruption. Many people have become dependent on the unbacked paper money system. Like, for instance, many savers put their lifetime savings into fiat or paper money denominated bonds. They have a great interest that the whole monetary architecture doesn't collapse. So if they have to make a choice whether to stop, to bring to a halt the printing press, or and accept the consequences, or to be in favor of a policy issuing new money, I think very much that still a majority of people would opt for the latter rather than the former. And you have also the industrial sector, which has great interest in receiving orders from government authorities. So what I'm saying is there's still very strong support, I would say, for keeping alive the unbacked paper money system. And that is why you can impose all these drastic measures like negative real interest rates, to impose additional taxation on financial wealth, to basically reduce the, like we've seen in Cyprus, to reduce the outstanding debt, like what happened in Argentina. So it takes much more for the paper money system to get into real trouble, I would say. And so I think we have to expect that this very unsatisfactory monetary system in economic and ethical terms will remain with us for quite some time, I'm afraid.
Yeah, I like your choice of words, ethical, too, because some of this, when it's so, there's an element of trickery that's going on that just doesn't, whether it's incorrect or not as a policy, the fact that it's being hidden is the most troubling. But you're one of the more pure Austrian economists we've had the pleasure of having on the show. You have used Austrian economics to predict upcoming events. Austrian economics is extremely predictive in this way, but based on the work of Ludwig von Mises and Friedrich Hayek, what do you think is coming potentially economically or politically based on all of this? What's the outcome? Well,
Ludwig von Mises always said inflation comes to an end. At some point you cannot inflate any further. This is the point where either the whole economic and monetary architecture collapses, or whether you have this so-called, as he put it in German, Katastrophenhosse, this with the cracker boom, where people are just trying to get rid of their money balances, exchanging money against whatever vendable items, so prices start rising very fast. And then the economic architecture and the monetary system collapses. I think this is the end game, but I think it's very difficult to say when it comes to the timing issue. I think there are still a lot of trickery that can be done to prevent the ultimate catastrophe, and so I clearly see very big problems further down the road, but I'm unfortunately not in a situation to put a precise timing on these issues.
Yeah, I think that the central banks around the world, at least of what I refer to as the the currency cartel, the main currencies, I think they're concerned, but I don't believe they've yet panicked, and so there's a lot more things that are yet to come, in my mind, and we've talked about on the show. There's a currency event that's coming, and that hyperinflation is first and foremost a currency event, and it's the lost confidence in that currency. But we're not there yet, at least in a general basis.
As you know, we have a debate going on. People having become very concerned about deflation, and there are others who would be concerned about inflation. And as you know, the unbacked paper money system would probably have collapsed already had central banks not issued more money into the system.
Correct. I don't think there's any doubt about that.
Had central banks not lowered interest rates basically to zero. And I think this is a good lesson to learn. We live in a world where the quantity of money can be increased at any point in time in any amount politically desired. It's just a political willingness that is required for increasing the stock of money. You can do that by central banks buying outstanding bonds. They can start buying stocks. They can buy foreign currencies against issuing new money. And having said that, the real risk in an unbacked paper money system is inflation, because inflation is, politically speaking, much more attractive than allowing the system to go through a deflation. And we had that problem back in the 1920s in Germany, where we had this hyperinflation because governments were very reluctant to allow the economy to adjust, and then the whole thing spun out of control and ended up in hyperinflation. And I think a similar problem has appeared on a global scale.
Yeah, the German-Austrian people just naturally really understand the problems here, whereas around the world, who've not experienced it, it's not as clearly appreciated or thought that it could possibly happen. Maybe I'm overstating it, but over the years, Thorsten, you've emphasized that unsound money is the master threat of corruption of governments and welfare state society and politics, and you've expected from your writing a sound money alternative to surface from the private sector, and you've been waiting for it to appear. But obviously, it's not Bitcoin. But is there anything out there? Have you found one yet? Have you seen anything yet emerging?
Well, Gordon, I'm a believer of good ideas winning over bad ideas sooner or later. Mm-hmm. And I think if you want to change the monetary system, you have to start with explaining the problems of the unbacked paper money system to people, and then to explain to them that there are alternatives. And as you hinted already, there are bitcoins, there is gold and silver, and I would say a kind of competition of currencies has been emerging already in recent years. People are looking, some people, and a growing number of people, I would say, is looking for better and sound money. Sound money that has better properties than the government-sponsored unbacked paper money. And I think this competition has started already. And as you know, we do not know the result of a competition. It's a process of discovery. And I think this is a very productive development, and we can only hope that governments won't clamp down this competition of currencies going forward.
Thorsten, we're up against our hard line. How quickly the time flies by here. Are there any key messages you'd like to leave with our listener concerning financial repression in general?
In general, I think investors have to really review their investments. I think the traditional saving instruments like bank debentures, government bonds, time and savings deposits are no longer a safe haven. We talked about financial repression, and I'm afraid that governments will take away most of our financial wealth in the traditional form. I'm a strong believer in investing in productive capital, namely investing in companies, in business models that have the ability to generate positive real returns, even in times of monetary disruption. And so I would encourage investors and savers to review their current holdings.
Could you tell our listeners how they could learn more about the work you're involved with, services or products you have, and your writings on this whole subject?
maybe it's good to come forward with our website. It's www.polleit-research.com. You would find information in German and English, and maybe that could be a starting point for learning more about what we do and what we think.
Thorsten, it's been an absolute pleasure. I thank you very much for joining us. We've got to have you back. Time's always a problem, but I know that financial repression is still early. There's a lot more that's coming, and as these policies unfold, I'd love to brainstorm with you here on Financial Repression Authority.
Thank you very much for having me, Gordon.
Thank you for joining us. Bye.
This has been Gordon T. Long, editor and publisher of GordonTLong.com. New recordings are posted regularly and can be found at GordonTLong.com. New show notifications are available through RSS feed, iTunes, and other social networking venues at GordonTLong.com.